Hi, this is Shay with Spark Tax Services. In today's video, we will continue our series, Tax Education for Truck Drivers. In this video, we will be discussing Schedule C, Part 2 Expenses, Line 9, Truck Expenses. This is the third video in our series. The first video is Common tax forms filed by owner-operators, and if you missed that video, it will be in the description box. Also, video 2, Schedule 2, Part 2 Expenses. It is an overview of the expense section in Schedule C. A question you may be asking yourself is, am I an owner-operator? Well, let me help you answer that question. If you received a W-2 from the business or businesses you drove for in 2018, you are considered a company driver. Again, if you receive W-2s for the business or businesses you drove for in 2018, you are considered a company driver. If you received a 1099 MISC or a miscellaneous income form, you are considered an owner-operator. Why did you receive that 1099 MISC? Because owner-operators are considered independent contractors, okay? So you are an independent contractor and there are different forms because of it you are required to file since you did not receive a W-2. Our focus on this video again is Schedule C, and let me just give a little review just in case you missed our previous two videos. The Schedule C is used to report income or loss from your business you operated as a sole proprietor or as a business or professional, okay? And we are focusing on section or part 2. Why are we doing that? Because this is where you need to start pulling out those receipts, getting documentation so that you can report your expenses in order to deduct from your taxable income on your tax return, okay, on the 1040. Again, this is Schedule C, Part 2, the expenses, and what we will be going over is line number 9, car and truck expenses. Since we are focusing on truck drivers, it will be truck expenses. So, with the car and truck expenses or just truck expenses, you can either take the standard mileage rate, which is the number of business miles driven times 51.5 cents, or deduct the actual expenses of operating your truck. Let's look at an example to see the difference between the standard mileage rate and also deducting the actual expenses of operating your truck. Okay, so in our example, we are saying that for gas, oil, and repairs, that came to $4,000 for the year. Fees and taxes were $500. Loan interest and insurance was $1,500. Your total actual expenses calculated together is $6,000. Okay, now for your total documented business miles, it is 19,500. So for your actual expense method, you could deduct the $6,000. And remember, that's for the gas, the oil and repairs, the fees and taxes, and also for the loan interest and insurance. Now, for your documented miles, let's say we wanted to take the standard mileage rate, we would multiply 19,500 because we said those are our total documented business miles times 54.5 cents. That's equal to $10,627.50. For this example, the standard mileage method would give you a bigger tax benefit. So remember, truck drivers, whenever you are taking this expense, make sure that the standard mileage rate is calculated as well as the actual truck expense as well. Hopefully you do it with Spark Tax Services, but if not, make sure whoever prepares your tax does both to ensure you receive the bigger tax benefit. Let's go over the standard mileage rate first again. Now, in order for you to take the standard mileage rate for 2018, you have to have owned the vehicle and use the standard mileage rate for the first year you place the vehicle in service, or you lease the vehicle and are using the standard mileage rate for the entire lease period. In order to take the standard mileage rate, what you would do is multiply the number of business miles driven by 54.5 cents, add any of your parking fees and tolls, and you're going to take that total amount and you are going to enter it in line 9 of Schedule C. Remember, because you're taking that standard mileage rate, you will not be able to deduct depreciation, rent or lease payments, or actual operating expenses. Let's look at actual truck expenses, some examples of what you can calculate. And remember, this is not an exhausted list. This is just an example so that you can start pulling all of your receipts together and all of your documentation if you are going to have your actual truck expenses calculated. Vehicle insurance, vehicle loan interest, the maintenance of your vehicle, any repairs, gas and fuel, parking and tolls, any type of registration, the lease of your vehicle, any wash and roll services, any vehicle supplies such as a CB radio. What if you have Sirius XM, first aid kit, logbook, truck bedding, any vehicle supplies you can use for your truck, you can use this or calculate this in your actual truck expenses. Now for depreciation, you will report that on line 13, and for rent or lease payments, that will be on line 28. So that would not be included in the truck expenses, okay? Now remember, you cannot use actual expenses for a leased vehicle if previously you used the standard mileage rate for that vehicle. That is it for our Schedule C Part 2 expenses, line 9, truck expenses. Next up in the tax education for truck driver series is Schedule C again, Part 2 expenses, advertising, commissions, and fees. That's line 8 and line 10 on the Schedule C Part 2 expenses section. This is the action step. Start and begin organizing your truck expense receipts. If you have any questions or you need help, do not hesitate to give us a call at 682-233-3087. You can also send us a text, or you can email us at sparktaxservices@gmail.com. This is Shay at Spark Tax Services. Be careful out there, drivers. Talk to you soon.